I want everybody to relax. You can do what I do. Get you a little, whatever your vice is, grab your vice for the night. Sit back and relax. I want to put things into perspective for you tonight. And I want us to realize this is just a standard pullback that we have not got in a long time. For those of us that are following the tech trade and listen to NVIDIA's earnings call, it woke up this morning with the NASDAQ, the S&P 500, the overall market up so high in pre-market. And as the market opened, maintain that level and push higher. And then we close a day like this. It feels like someone punched us in the mouth. It seems like you lost your best friend today. But this is just a standard healthy pullback. So it's going to be an easy episode, but I just want to look at a couple things. So S&P 500 was hit pretty hard today. We were down 1.5%. Grand scheme of things, guys, we've seen this before. Not that big of a deal. NASDAQ down 2%. Big drop, yes. Not that big of a deal. We've been running hot so long, right? Past 6 months, the NASDAQ, we're up 15%. S&P 500, we're up 10%. If you want to look at the Dow, that was down just under 1% today. Past 6 months, up 7%. So we ran hot for so long and we did not get a pullback. And even though the market opened the way it did today, yes, it sucks, but I just wanted to put it in perspective so no one goes crazy. And so now let's look at the charts. And I put these guys right next to each other because they are very, very similar. Okay? So let's look over the right first. And let me get rid of this one actually for you guys. And we'll make this a little bit bigger. Okay? So I just want to look at the chart. This is the year-to-date chart of the S&P 500. And you can see off those April lows, we've just absolutely ripped. Now, October, because those are historically, October is a weak month and we were expecting a pullback. We got some volatility, right? But we ran right through it. We actually hit a new all-time high out of October, right? At the end of October. Then in November, we're essentially experiencing the same thing. And so I'm going to go to the 3-month chart. So we can see right here, look at this, October 10th. And then let me scroll it over for you guys to see. Then look at today. They're almost mirror images, right? We've done this before. We've been here before. Now, thank goodness October 10th was a Friday. And so it stopped the bleeding. And then on October 13th, the market bounced. And then we took off and we actually hit a new all-time high at the end of October, October 29th. And then, of course, it fell back down. But it jumped back up and then it fell back down to where we are today. So unfortunately, we don't have a Friday to save us. Or we didn't have the fact that today was Thursday. So we have another day of this that we have to go through. More than likely, the selling is probably not going to be over. I kind of expect us to hit maybe this just under 650 range and probably bounce off of that maybe. And then maybe finish off in the, hopefully get back up to where it was on October 10th, the bottom of that, around 652, 653. So hopefully we don't get any extreme selling like we got today. But look, we've already been through this. October, we've gone through it. We've ran up so high. This is only a 5% pullback in the S&P 500, okay? 5% pullback, we haven't had that in such a long time. You typically have those throughout the year multiple times. So we're not even in correction territory and we're far from bear market. So I want to put things in perspective. Now, some of you might have been like me and we got to key levels and you decided to jump in. Now, if you're doing long-term trading, awesome. kudos to you. I bought some Meta today and a couple other things. I bought some Uber because Uber was down today and added that to my long-term portfolio. So I just wanted to preach. This is a healthy pullback. Take advantage. If you are looking at some companies, more than likely they've probably hit your price targets. Maybe it's a time to start nibbling. Don't go crazy. Don't buy. Say if you wanted to invest $1,000 in X stock, don't put your full $1,000 in right now because you think this is the bottom. Put in like 250. If it falls a little bit more, put in 250 more. And if we get a bottom and then it shoots back up, maybe if you want to put in the rest of your 500, you can if you really want to be aggressive. But then still wait because there could be more of the selling that's going on. It's only a 5% pullback. What was very eerie to me is the S&P 500 and the NASDAQ. They're both down almost exact percentage. It was like 0.055% for both of them. And it just seems like this was a lot of this orchestrated. Now, a lot of people are tying it to the fact that the Fed right now is signaling there might not be rate cuts. So that's part of it. We still probably have some type of questions as far as the AI trade. A lot of the guys on talking heads on TV, yeah, NVIDIA's doing good, but what about the other companies? Well, they're doing good as well. You just saw the biggest buyers in NVIDIA's chips. Essentially, everybody besides Tesla had a really good earnings report. Meta had a decent earnings report. Only thing that was bad about it is that they got hit by a one-time charge. Other than that, they would have had an excellent quarter. They're showing you that their investments are paying dividends as far as their reels and their advertising. It's just that they're raising expenses, and now people want to get spooky about them raising their expenses. Yeah, are they? Maybe their margins are going to be a little bit smaller than what they have been previously because they're spending so much. But look at this in a long-term perspective. If you're still somebody who believes that these people are investing these ridiculous amount of money, you're not getting a return, you're not doing your research. These companies are getting the return and they're just continuing to spend because if they stop spending, they're probably going to fall behind. But I'm not here to convince you on that. You're going to have to do your own research. I'm a believer. I'm not trying to convince anybody. Like I said, I got bit today. I jumped in a couple options. I jumped in a QQQ at 600, and we'll talk about that just in a second. And that thing dropped. But right now, I think the best thing is to do if you're not buying long term, like ETFs, like your S&P 500. If you want to buy the Qs, if you're not doing that right now, just sit on your hands. There's really no reason if you're investing in the best companies like we are. There's no reason to just sell all of your shares. I haven't sold any of my long shares. If I sold anything, it's because I'm nibbling off the top of my companies that have been doing well, and I've been adding on to some of the companies that are underperforming, like your Meta and your Uber right now. Robinhood is another company that's tied into Bitcoin. Bitcoin is making an impact, and this is really kind of confusing for me to say, but after listening to a couple people and doing the research on it, it kind of makes sense on top of the interest rates confusion, whether or not we're going to get that rate cut, and the market had that priced in. And now, so we're getting this on top of the negative sentiment, the fear of potentially no rate cut. It's just all compiled onto each other. But so many people are betting on Bitcoin and they're leveraged and they're using these higher risky investments and bets to bet on Bitcoin. And when that happens, maybe they start selling their other assets, and that's what's happened today. Personally, and a little bit of conspiracy theorist in me, I think this was all kind of orchestrated. Market opened, it didn't like blow past certain spots to say that the market was about to take off, and it seems like right after the first hour of the day usually has the most volume, but right after that hour was up, then you got this dip in Bitcoin, and then just everything else kind of fell along with it. And it just seemed like it was orchestrated once people saw, all right, yeah, we're not getting a lot of people rushing in, buying, because of fear of missing out, the FOMO. So we're going to tank the market, and this is kind of like our last hurrah to make money. And that's what it seems like here, because we've seen it here. The bears made a little bit of money here, and then maybe they exited their trades, and then the market went off. So maybe we get, like, again, we get another day of this. We have to endure another day of this. I mean, just turn the TV off. Don't even look at, at your brokerage portfolio. Just let this kind of go through its cycle. We get through the weekend, and then maybe we get through next week as well, because we have the holiday coming up. And I believe that is going to be a shortened week because of the holiday. People get around talking about the market. And then maybe we got people jumping into the market again. And then it sends us higher into the rest of the year. That's just kind of like what I'm thinking that's going to happen. I'm going to do a little bit of research and see if that has transpired the past year and the year before that, to see if we have some stance to fall on. But again, I just want to kind of ease your nerves, because I was kind of flabbergasted at what happened today. Again, I just want to, before we close out here, I want to look at the S&P 500, and it's essentially the same thing as, or excuse me, I want to look at the QQQ, the NASDAQ, essentially the same thing as S&P 500. October 10th, we saw that major sell-off, ran high, hit new highs, and then today we are where we are now. I think Q's probably dropped to 680, 584 range. Maybe if it gets real nasty, it drops all the way down here to 571, and we maybe bounce off of that and come back up where we are now, hopefully. But just want to put this in perspective. Again, the Qs, S&P 500 are down 5%. Yeah, there's no need to go into who did what today. We already know that NVIDIA was down after it was up today. I don't want to bore you guys with that. I just want you to don't let this ruin your weekend. This is a standard pullback. It's actually kind of healthy, because I know the BS stocks that have been flying high, those are starting to settle down now. And a lot of the money's coming out of that, and more than likely is going to go back into the best companies, and that's what we invest in. And so this is a long game. We play the long game. Yeah, if you're trading options, this sucks, because your accounts are probably in red. If you jumped in some of these trades with me, I apologize. I was early like I typically am. I thought I was doing my due diligence. I did not see this coming. So let's hold through. Let's have some faith and sleep well tonight. Don't worry about this. A year from now, 6 months from now, we're going to look back at this and laugh. So enjoy your evening. I'll see you guys tomorrow.